Make sure to turn your mic on.
Good morning, everybody. Let's call this meeting to order. Let the record show that right now Jeff is missing. Oh, here he comes. Everyone's present and accounted for.
You got the minutes, right?
Yep, they're
Okay.
there.
Let me tell you, you're taking the minutes.
Oh, yeah,
Okay.
sorry.
Is he fired up, Jeff?
Yes.
He is, good, okay. All right, we need a motion to approve the agenda.
I make a motion to approve the agenda in the minutes.
Okay, Doak made a motion to approve the agenda in the minutes and Tom is seconding it. All those in favor signify by saying aye.
Aye.
All right. Public comment, anyone at all? No? Okay. We first thing would be administrative report.
All right, I'll start.
You start.
Okay. December preliminary statements went out January 15th. A lot of activity in January has to do with the previous year. Many of the invoices for December are paid in January. A lot of the revenue received for the previous year comes in January, February, even into March, and then we cut it off. So what I did was I printed statements out on Monday because a lot of activity creates a lot of changes. So what went out on the 14th has been updated quite a bit. So when I get to the departments, if we go through in detail or if you want to, then there's quite a few updates from that. But we'll start with sales tax. December sales tax came in at 120,000, actually a little less than I was expecting this time. But when I look at the year in total, November was significantly higher. And if we think about what's been happening this year, if people are shopping at home, having it delivered. So if you're shopping for Christmas, Christmas is usually the biggest, December is usually the biggest, if not the second biggest sales tax collection in our short 2-year history. If you order online, you order it sooner. So the fact that November's up quite a bit and December wasn't quite as high isn't a surprise. In retrospect, we still for the year we got 1,316,887, which is up about just under 60,000 from the previous year. So we did cross 1.3 million for this year. As far as the department's financials, just a review that we've talked here and there about the Highway Special Revenue Fund because of the heavy snow in the early part of the year. They were the winter maintenance was over budget for the year, and I think this will not change for the Special Revenue Fund. They're about 48,000 in total over budget because winter maintenance was up, but then some of the road construction was down. The Internal Service Fund is still a work in progress. The statements you're looking at would imply that there are 400,000+ in the whole. A couple things, that one's not complete. There's some year-end entries. There's December entries which aren't in there. The December billing is done. The entries weren't in at that point. And then there's closing entries, which is typically done at the same time as the audit. And as of the printing I had on February 1st or 2nd, that was already cut in half. So there's some work to be done on that. It's not the deficit that appears in those statements. And some of that is just because with COVID, people working from home, it took a little longer this year to get some of those entries in. So typically by the time I print the December statements, the December entries are in, if not shortly after. This time it took a little longer. The coroner was a few $100s over. We took a best guess at what his expenses would be. I think there's still some revenue coming for them. So that may not be the final number. Information services was about 3,200 over. So there we did make an entry and we missed it by 3,200. So I need to review what's in there, make sure we didn't put something in 2020 that belongs in 2021 and just see where the difference was. But in the big picture, relatively small. But again, we took a shot at it, we missed it. So the question is, how do we do that better next year? The health department, just a heads up that it appears that they're behind on they may be headed for a deficit, but there's a lot of revenue outstanding. The COVID grants, there's about 60,000 outstanding, and the WIC revenue tends to come in about February. So I don't remember that dollar amount, but they'll be fine. And right now it appears that the finance department is $10,000 under budget. That's not the case. This is a little troubling, but I haven't gotten an invoice from our software support since April. And when again, COVID, maybe they're working from home, maybe they can't get it out. When I call in December to say, I'll take it for free if you give it to me, but I really don't want to have 3 years worth of support fees 2 years from now. The reason was that they're putting in a new system and they can't get their invoices out, which for a company that's maintaining my software, I'm a little troubled by that. But it is what it is. So we can go through other departments. When I look through them, the outstanding revenue, other departments will be fine. So if there's questions about specific ones, I'll answer those. I won't necessarily take the time to go through department by department. And again, so the remaining activity for 2020, January, there's a lot of receipts, a lot of disbursements for the previous year. Payroll, the first payroll of the year was split. That one I got in the preliminary statements. Now February, that's going to taper off quite a bit. And in March, what we look at what's left, there's a handful of items. If they come in, great. If they don't, then we'll do entries and we'll best estimate what's out there yet. And then by the time April rolls around, we'll have our unaudited numbers. And then by the time others come here in May, we should be able to say, okay, this is where we're going to be. And then think about April or so, we'll come and say, here's our final unaudited numbers. And we'll give them the effects on the fund balance and what the contingency was and any surplus in any of the funds. So that's coming up. That's all I have.
Thanks much, Paul. You want to take over?
So for the medical, dental, and large finance reports, or I should just say monthly reports, as you'll see for the year end for the medical, we were at 103.59%. So we were 3.59% over, or about $110,000. So when we start to think about a fund balance for the health insurance fund, we may have to then recommend to the finance committee that we increase our premium just a little to keep that fund balance healthy. If you go on then to the dental, we see at the dental, we were at 93.05, or about $11,000 to the good. And then finally for large claimants, you see a list of 22, but really if you're looking at the number, we had 11, maybe 12, depending on what comes in over the next month or two. We have probably 11 or 12 that were actually over our stop loss payment. Again, these are just at times things that happen, whether it's an accident or some type of catastrophic claim. This list isn't, while large, is not uncommon for what we've seen year after year. So as we continue to work with Horton, we try to figure out, are there different ways to reduce some of this? And it's not from a safety program, and a lot of times it's not from a wellness program. It's cancer, it's diabetes, it's backs and those types of things. But in that same respect, with some of our folks, they're in physical positions that, after decades of hard manual labor, that's going to have a toll on the body. As for diabetes, unless the county is going to somehow try to incentivize people's diets, which is going to be pretty difficult, then we're just going to have to try to do as much education as we can. Are there any questions regarding the Horton reports?
I got one thing I want to add.
Sure.
So we look at the financial statements and compare them to the Horton reports. Now that we're at year end, I just want to point out again, that the financial statements for health show an $87,000 losses compared to 109. And that's because for financial reporting, I have a different set of standards. Horton reports are cash in, cash out. For financial reporting, there's an estimated, the IBNR, incurred but not reported estimate that I have to put in here for financial purposes. And that's the biggest difference. They'll be close, they'll never be exact. Dental, on the other hand, doesn't have the big outstanding claim. So the financials show 15,068 versus what, 16,000. So that one, again, will go up and down, will never be exact, but it'll be close. So if you see the differences, that's the reason for it.
Thank you, Paul. If we then go to the overtime report and we go to year end, I guess that's where I always like to go with, is 82,000 for the sheriff was a little high for what we had budgeted, and 33,000 for the jail division is pretty close to what we had budgeted for overtime. You're starting to see, or will be starting to see, overtime more in the human services fund, and as opposed to previous years. And the reason is because we're actually reporting it, where before there was this unwritten rule that somehow overtime was bad. And so they just do it through comp time. And we're now cracking down that you're only allowed 24 hours of comp time to bank. So we are going to see a little bit more overtime in that respect. And highway is 116,600. Again, remember that not all that 116 is a county expense. Some of that is invoiced to other clients, whether state or local municipalities.
Scott, I have a question.
Do you have your mic on, Mr. Chair?
I do.
Okay, I couldn't tell. Yep, you're good.
Okay. Regarding public health and all of this, with overtime, the reason it comes to mind, I'm assuming that all of they've had an extraordinary amount of extra time. How has that been covered? Is that, and two parts to the question. One, I think there might be two parts to the answer. One, I assume there's been CARES Act type funding that's provided additional people. And how many salaried people are there in that department then? And I would assume that's impacted them.
Certainly. I'll do the different parts. Yes, there has been a certain amount of overtime. I will say at the start of the COVID pandemic, the public health director, Cindy Kinnard, who is salaried, took the lion's share of that time, whether evenings or weekends. After a while, that was just starting to burn her out. So she was then allocating some of that to her staff, of which there is some. It's not exorbitant in any way. The public health director is the only salaried position in the public health department. Everyone else is hourly. But you also did assume, right, Supervisor Olson, that CARES money or the pandemic money from the state is covering those extra hours and those extra costs. So there is not an extra cost to the county regarding that. We are getting reimbursed for those hours.
There is only one salaried person in that department then that would have been working kind of way beyond what would be a normal.
Correct. And as I had said before, probably the good first half of the pandemic, Cindy had felt that, again, it was, and if we know, at least in Kewaunee County, the first half of the pandemic definitely was not as busy and chaotic as the second half of this has been, or at least of the year, I should say. And so therefore, Cindy had decided that she would take most of that on herself. Now with things going on in vaccinations, there is more overtime, and some of that is being allocated to the hourly staff, of which they do receive overtime. But Cindy does not receive any overtime, and I would shudder to think how many hours she has actually spent.
So it would be
outside.
way beyond. So the hours that were put in this past year would be way beyond what, I mean, I when you're salaried, and I apply this very much to myself as well. When you're salaried, you take on extra time at times. That's the way it is. But what would but this past year has probably been way in excess of what would be a normal expectation.
Absolutely, very much so. The $4,500 that was spent by the Public Health Department in overtime, I don't even want to make a guess as to the amount, but the total amount of hours spent if our public health director was an hourly employee would far exceed by multiples of what is currently there.
Okay. Now, I'm not a big, as you know, I'm not a big spender, period. And I'm also a very firm believer that people who are salaried, you put in extra time, but this does seem to be a somewhat extraordinary year. And I don't know whether the board should at some point consider a one-time bonus to compensate some of that, because it does seem to be, this has been a highly, highly irregular year. I think everyone would agree, but it's thought.
Well, if I may, Mr. Chair, Supervisor Olson, I wholeheartedly agree with what you're saying. In fact, I believe that this is one of those events that comes around, I don't want to say once every 100 years, but that's kind of what it is for right now. And therefore, is there the ability for the county, and do I think the county board should consider an additional payment for the public health department? I do. And I also believe that if that were to happen, I believe that the CARES money that's available would help to fund that extra payment. And I can verify that.
Okay, thank you.
Did you ever have, did Cindy ever track how many hours she actually put in?
I'm not sure if she did or didn't. All I know is that for at least the first 6 months, it was a 7-day-a-week evenings, that whole type of thing. But, since as a salaried person, she does not clock in and out. So therefore, I am going to doubt that she really tracked all of her hours, but I can always check with her.
Okay. Any other questions on the overtime report?
Just a comment. If you look at, I'm looking at the sheriff and jail division again, and what they spent actual in 2019. We've heard over the last year that with the change in scheduling and shoring up positions and everything, that overtime supposedly was going to be reduced in 2020. And it's more in 2020 than it was in 19. I just an observation that apparently that is not happening. As far as a reduction in overtime in those two divisions.
I can respond from the jail standpoint. I'd have to look back from the sheriff, the patrol side. I know that prior to 19 and 20, prior to the new schedule being put in, that overtime was significantly higher than what it is currently. It was 50, 60, or even more. But yeah, as we continue to try to refine this, around 30, maybe 35 is the magic number for the jail. But I will definitely continue to take a look at it, Supervisor Roundon.
Thank you.
Any other questions for Scott? All right, moving on to investments, Ms. Dax.
The quarterly report, but this is just something extra. I promised Doak for 2 times now that I was giving him the cash flow. Now you guys are done with the budget, I'm gonna be able to sit on that promise.
Michelle.
Okay?
If you don't speak in the mic, they can't hear it on the broadcast. Seriously.
Thank you. Up there,
You can just turn on your mic
Turn on the
there.
mic. Is that one turned on?
The one right in front behind Jeff is on.
Okay. I'll move that.
Thank you. So you turn on the button that looks like a person.
Okay. Thanks. Okay, I'm green. Okay.
Perfect.
There we go. Okay, we'll start out with that quarterly report. This is the snapshot that we looked like at the end of December 31st of 20. I have it wrong up there. It should be 2020. 21. So I'll make that change. Basically, again, it's just that snapshot of where we are, where we have been. The only big thing that I can really see is obviously our revolving loan balance has changed. And that's because we've paid that back to the state. And that happened, I think, at the end of October and the beginning of November. But otherwise, that kind of gives you a snapshot of what we're looking at. And at this point, you know, we're looking good. We're at the end of the year is usually, obviously, that's when we've spent most of our, we've collected all of our money for our revenue or for the tax part of it that I deal with. But so to have money left over at the end of December for me is a good thing. Sometimes we weren't always in that situation. So any questions on that report? Okay. Next, we'll touch by, I also gave, during the last quarter, tax bills went out. So I kind of give you a comparison of the tax rates for each municipality, along with the school district that you're in, and the comparison where we were in 2013 to 2020. Seems like a long time to compare, but there were a lot of things that happened during that time. And in the bottom, I just have a summary. You know, when school districts passed the referendums, we had the Dominion deal, and then just some more school districts passing those referendums. The numbers behind the school district, I'll use Kewaunee, for example. In 2015, they passed a $16.2 million referendum. That's going to expire in 2023. So that's what that means. Okay, and you'll find that on the bottom of your tax bill as well. So again, it kind of gives you an idea of what has happened and the in regard to the tax rates every year. So I like to do this every year so that people know where it's going. Any questions on that? Okay. And I will make note that in the town of Luxembourg, Doc, the reason that yours went down so much is because you had that reassessment last year. Okay. So anytime there's a reassessment, usually you'll see that tax rate per thousand goes up. But then that usually means that your house value has also gone up. So it kind of washes out, but it looks better when you can say your tax went to $3.62 down 1,000. Okay, any questions on that at all? And if you do, you can always give me a call. Okay, and the last one that I was just going to bring up to you is just kind of that cash flow. We had talked about cash flow and our investments. What I did is I looked back to 2017. For the long term, I consider that to be our Schwab investments. That's who we have through Bob Moore, and that's going to be our long term. Short term, I included the LGIP, which is the pool down in Madison, and the American Deposit Management. That's another short term investing that we do. Associated Bank, we had them for a little bit, and then for the operating expense, I just used our operating checking account. And we also now started that Nicolay sweep where we have money in there and it sweeps into our account as we need it daily. So we have to keep a minimum of $1 million in our checking account. So it sweeps that money in and goes from there. But that's kind of the way that I looked at it. I also, on the last column there, subtracted the revolving loan fund because technically that wasn't money for us to use or to have at our disposal. So the last column is going to be basically the cash we have with all our investments at the end of every month. Okay. And the second page is, I'm a visual person, so I use the chart to show where it is. As you can see, our long-term investments with the Dominion, when Dominion was happening, we scaled back on that because there was so much uncertainty about what was going to happen with Dominion. We pulled back some of the long-term investments. You can see that we have since built that back up some with Schwab, and then you can just see our fluctuation. As you can see, December usually is our lowest month. July is usually our highest, and that's because that's when we are actually collecting those payments, those tax payments. In July, we also get our shared revenue. We also get our quarterly we get our Dominion payment. We get utility aid. We get all that along with our school levy and first dollar credit. It's deceiving with that school levy and first dollar credit because we're going to get $2.8 million for school levy. But that is actually going to get paid back out to the taxing jurisdictions. The state sends it to us and then we disperse it. Same thing with the first dollar credit and the lottery credit. Okay. Doke, you have a question?
So,
Mhm.
when you are making payments
Yeah.
to the individual townships,
Mhm.
does that come out of short term or operating?
It's coming out of operating. I hope to have it. I hope to have enough in the operating. If not, but I'll use it for example. In August, I had to pull out. We paid out $8 million to our taxing jurisdictions. I didn't have that, so then I pulled it out of the LGIP, and it floats in. The LGIP is kind of where we get a lot of our direct deposits from the state. So I'll just say our highway aids come automatically into our LGIP. Our human service aids come right into the LGIP. So could that really be an operating account? Yeah, it could be, but we look a little longer term there. Mhm.
Let me
Yeah,
when
yeah.
I see the fluctuation in the short term,
Mhm.
the red bar,
Yep.
month to month, is that because you're paying those big payments to some taxing entity?
Yep, let's use July of 19, because that, we have a big amount in there because I'm even shifting money into there so I don't have so much on cash on hand, and then I'll pull it back. But then we also remember, I also got, 2.8 million in the LGIP for my school credit. So I'm getting that, and then in August, you see it goes down because I've had to pull
They
the,
both- yeah, they both
Mhm.
are both
Yep,
down.
yep,
Okay.
and because
So you
then I
see
have
that
to
in the
pay
same-
that. Yeah,
Okay.
yeah. It could be a horse apiece for some of those, but for the most part, I think our operating is mostly just, I looked at it, it's just the pool. And I mean, just the sweep pool from Nicolay, but it's very liquid. I can pull that and have it that same day actually from the LGIP, so.
So if I'm understanding
Yeah.
correctly, Michelle, what you're looking at is for the county's bills, we take that predominantly out of operating.
Yeah.
If operating gets under a certain level, then you transfer money from short-term into operating
Exactly.
to cover anything. And then if you're above a certain amount in your operating, then you transfer some of that operating into the short-term.
Exactly.
And if for some reason our short-term gets to be to a level too high,
Mhm.
I don't want to say too high,
Yeah.
but over a certain threshold, then we transfer that money to long-term like we did in September, October of 18 and December, January of 18-19.
Yeah.
Where we put in basically an extra $1 million that had one time probably been in short-term, and we go, well, let's get a better rate of return.
Exactly. Does that make sense, Doug? What was that?
Well, then the next question is why do we, if you look at the way we spent here
Yeah.
and where we are for balance, why do we not have more of the red in long term? Don't we get more money for that?
Yeah.
Or more interest for that?
In a perfect world, we would, but right now I can't, I can't get a higher rate. No.
Yeah,
So-
if we bought some more now, the rates are essentially the same as short term.
Yeah.
Oh, okay.
So
But
that's,
that is the goal, is to determine, okay, how much red do we have? We don't need that much red. Let's
No.
put more into blue because we'll get much better rates.
Yeah, because if you look at your quarterly report back
I
again,
was just gonna say.
we're pulling down for interest rates for some of these, 0.625, 2.5, 1.5. So from that standpoint, our long-term isn't really a good long-term interest rate. So it's almost better to leave it in short-term. Sure, we may lose a few basis points, but until the rates go up, we don't necessarily want to lock in at those rates that you're locking in for a year or two or more for just, less than 50 basis points.
And actually you see a decrease in April of 20. Our short-term ADM had better rates than our long-term, which
So-
doesn't normally make sense, but that's what the market was.
Yep. And at that time, our advisor said, go for it. So
Yeah, he said
he actually
you can
encouraged
offer
us
it.
to pull it out because he couldn't beat what was provided by ADM.
This is, by the way, this is very, very clear. Thank you
Yeah,
for doing
yeah, I'm a visual person, you can.
that. Very helpful.
Okay, anything else? Any other questions? I think I'm done.
Thank you.
Thank you.
Okay. Fair Board.
Uh,
You wanna take it?
Well, again, I'm just gonna quick go with that. The Agricultural Association has asked for a change in the insurance limits and had been asked to provide some additional information to the committee. And so the Fair Board is here to therefore to go over the information that they did provide us and answer any questions. I'll leave it to Mr. Benish at this time, or whomever, I'm sorry.
Yeah, we were asked to go out and do some studies to see what other counties do. We have had a hard time finding because it's so different out there. Some counties own their fairgrounds, some groups own the fairgrounds, back and forth, and most of your fairs are shut down. Their offices, we called up there, we don't get a response back because it's just a part-time telephone. So Nancy on the part of the fair went out and did some research. So at this time, I'd like to turn it over to her and explain to you what she found.
Good morning, everyone. The
Nancy? Nancy, do you have the little
No, she's gonna push the button.
the people one?
No.
Oh,
The mic might be on.
there we go.
Hello. Okay.
Is that on or no?
Nope, it's not
I
on.
don't know why this one isn't going. It's green,
It's green.
and I touch the screen. Something's not right on that one.
Thank you.
Broken already?
Good morning, everyone. The handouts, as Pat said, it was difficult to get, I wanted more information for you. In front of you is a copy of the certificate of liability insurance from Brown County that I was able to have them send to me, as well as one from Fond du Lac County. And there's also, I included a map of the state, has the kind of where all the counties are. Door County, we talked about contacting surrounding counties. As we said last meeting, Manitowoc County is no longer, isn't part of the equation any longer. Calumet County, I contacted, they own their own fairgrounds, so they as well are kind of taken out of the mix. Oconto County, I contacted I tried to contact them. Their website is down. I contacted Shawano County as well as Outagamie County and left messages with both of those to return my calls, and I have not received a return call yet. I did speak with individuals in Marinette County. I was told that they would be sending a certificate of liability insurance. I have not received that as of today. Their policy is 1 million. This is what she told me, 1 million with a 4 million umbrella. Door County, Pat spoke with the individuals at Door County. I did not. And he was told that they are at 2 or 2.5, I guess, depending upon what types of things they have going on during their fair. So if you look at Brown County and Fond du Lac County, their general liability, each occurrence is 1 mil, and their umbrella is a 1 mil, aggregate 1 mil. The agreement that the county has is asking for a 5 mil general aggregate per event, and a 5 mil on the products completed in operations aggregate, which most of the, I'm looking here. Why can't I find those numbers? Products completed. Brown County has the 5 mil and so does Fond du Lac County. So I know it doesn't look like much, but the counties that I could contact were, like I said, were at that 1 mil. I spoke with our insurance agent as well. The 5 mil is very, very difficult, I believe, to find anyone who's going to have that, especially a county our size. So that's what I found.
So what would the aggregate amount, if not 5 million, what did our insurance agent recommend?
We can get, yeah, our insurance agent recommends either a 1 or a 2. With a 1 mil general aggregate, which would be the umbrella.
Scott, didn't Mr. Woznicki at some previous meeting, didn't he give a recommendation on this? I seem to recall that he said that 5 million wouldn't necessarily be, you wouldn't necessarily need, but he did seem skeptical, if I recall, about 1 million. Am I correct?
I believe the 1 million, yes, as for and I don't want to, I'm thinking your recollection is right, Supervisor Olson, that 5 could be modified, but the thought was 1 million is a little bit low.
Right.
So if I may, just for the committee's sake, is I think what we're basically looking at from both the Fair Board standpoint, and if I'm misspeaking, please correct what I'm saying, is I think what the Fair Board is looking for is a umbrella or a general of either 1 or 2 million. Of course, they would prefer the 1 because that is cheaper. If we're looking at what some of these others are, they're doing basically 1 with an umbrella of 5 or a general aggregate of 5. So I guess if I'm assuming what the Fair Board is saying is what you see in front of you from both Fond du Lac County and Brown County, that the Fair Board would like to see something similar in that respect. Is that a fair assessment?
Yes.
Okay.
Do we have a quote on the 1 versus $2 million on the aggregate?
We probably don't. They may, and this is up to you, Supervisor Vollenweider, but I want to be very careful only in the respect that part of the reason why we put the insurance onto the Fair Board was to have us not be involved in the negotiation or just depending on what the cost is. We just want to set what we want as insurance levels, not necessarily what the cost is. Am I making sense?
Well, I understand that, but I mean, that could be a big difference on what we approve.
It could be. I guess my recommendation is to focus on what you want as insurance coverage levels, not necessarily what the premium is, because the premium is something that the Fair Board then just has to take as a cost of business and decide how they're going to go with that. The reason we're doing insurance levels is to make sure that we're adequately covered if some type of tragedy or occurrence were to happen.
Well, I would like 5 million, but I just can't say that I'm going to approve 5 million without having a clue what the difference in cost is.
No,
And I don't
that's
want to
fine.
micromanage the Fair Board, but
it wasn't this committee that brought this up, right? It was Jeff?
Well, you mean what the levels are?
Well, wasn't it just recommendation that they go to 5 million so that we were better covered?
I think this is what had been originally part of the contract for many, many years. So I don't know that there was specifically any recommendation by Mr. Wisnicki as to the levels. It was what was in there. I think his only concern is that he wants to make sure from a risk management standpoint that the county has sufficient levels of coverage, and that's why I think he was a little leery about the 1 million.
Okay, I'm just going back to, this committee didn't go to the Fair Board with a request. I thought it came from some other agency or some other person within.
No, the request came from the Fair Board to try to reduce the amount of insurance levels that they have to have in their insurance policy, because that would then save them money.
Right, I know, but where did that, I mean, they already have 1 million.
They already have 5. Currently, right now, they have what's within the contract. They're looking to reduce some of those levels so that way they can save money
Well,
on.
They currently have 5, but I thought we were just told it's almost impossible to get that insurance?
It's not impossible, it's just more expensive.
Okay.
I am fair in saying that, correct? I don't want to misspeak for the Fair Board. I want to be very careful about
Okay, that
that.
was my misunderstanding. So how long have we had 5 million insurance?
Probably since 1980. I mean, it's been part of the original contract for a long, long time.
Let me ask you this, are you carrying a 5 or initial 5, or is it a million with a 5 rider?
I believe that we were with a mill with the the 5 included the umbrella.
The umbrella.
Right. I believe, didn't we have an agreement? Because to back the train up a little bit, this policy always came due in July, and there was time restraints on looking at doing any changes,
Right.
which is why we're here now this early to change, to have to come to you and to ask to lower that general aggregate per event number, which is at 5 mil. Right now, per the agreement that was dated January 2019.
So I guess I'm struggling with what exactly our role in this is. If Mr. Wisnicki was saying that we're at 1 million, he'd like to see it higher, but we're at 1 million and then we're at a 5 million aggregate currently, but we can't get a 5 million, but we already have a 5 million. Obviously 5 million costs more than 2 million, which costs more than 1 million. The Fair Board is recommending us to decrease the 5 million to save money. And we're to decide what level we want it to be at, not knowing what the cost of any of it is. I don't know what I'm going to do here. I can't make a decision on what I'm being presented.
Agreed.
Then what we could do for the committee, I guess, is if it pleased the committee, we could have the Fair Board come back with 3 different quotes, a 5, a 2, and a 1.
Perfect.
Would that work okay with the Fair Board?
Yes, we can follow up with this. This was brought up before this brand new county board. We were in workings with the last county board, and they were pretty much in favor of it. And all of a sudden it was a change of board and it never got brought back. But like Nancy stated, we used to be with our carrier out of Indiana, and we'd get our notice of policy premium July 1. The fair starts in a couple of weeks. Finally, we got smart to this, is the reason we have came back. It was always by our fair secretary. He took care of everything, and the rest of us now, that person has left our organization. Nancy has stepped to vice, I have stepped to president. And so we are starting on our own fresh also. But we do have an agent in Green Bay that's willing to work with us, compared to it used to be one out of Indiana. You get that, you had no time, and that's where the trouble got all started when we come back to the county to do things on less than 2 weeks. So that's where we're still rolling around here ourselves, trying to understand.
And
but
we're changing
trying-
agents. That's where the difference is coming in on the 5 million cost and being difficult, whereas we were in Indiana agency before.
But we are willing to go out and get this information. felt with our lease, we have to come back to this committee and work with you and then go from there after we'll provide you with more information.
In fact, I'm sorry if I may, I think that may be best, because as you're saying, Supervisor Bolenweider, and I appreciate and understand is, okay, what is the difference? If it's only $10 to go from 2 million to 5 million, then we'd say, sorry, too bad, so
Right.
sad, get the 5 million. So maybe the easiest way, like I said, is to do what's in the contract, then do it at a 2, then do it at a 1, and then we can have a really good discussion as to, well, is 1 million sufficient, or does 2 million give the county more comfort? You know, those types of things. So that way there's a good discussion.
My question is that if we're considering what a reduction in the liability for the board would be, how does that impact the county? If they were to, you know, a lawsuit were to exceed what was available from the insurance, would the county then have to pick that up, or?
They would have liability, they would have exposure. How that would shake out would be determined by the courts, right?
Right. But
Exactly.
do we also not have insurance for the county?
I want to be very clear about this. Regardless, we always have insurance on all of our equipment, buildings, and property. So what happens is, just like with, let's say, the races at the fairgrounds, we require anyone that is using our property to have their own insurance. So that way, if something does happen because of them using our facilities, that their insurance is the first one that would take care of any type of claims. Does that prevent anyone from therefore also trying to sue the county? Sure, they can try to do that. And if there was a claim that was beyond what the insurance was, yes, there might possibly be exposure to the county, which would be determined by the courts, as Supervisor Olson said.
And that would get messy. And that's why you want to make sure that you do have a reasonable level of coverage. I want to thank you guys. I mean, I can't imagine how much time you put into all of this. And this is just one part of what you do. It's,
Yeah, I appreciate that as well. I don't want you to get frustrated, the fact that we had a change of the guard at the committee and whatnot, but appreciate what you guys are doing. So thank you.
And the good thing is, then this is where I'm really happy, is that we're talking about it now. So therefore, this gives, I believe, this should give the Fair Board, even if we were to do this in March, this should, I won't speak for insurance folks, but this should give the Fair Board sufficient time to be able to get the insurance that they need and negotiate that, and not be painted into a corner and having to accept something because the fair starts in 2 weeks. So.
I have one question. So when, if I'm understanding my assignment for next month, that you would like quotes on a 5 mil, a 3 mil, and a 1 mil. Is that general aggregate per event?
5, 2, and 1.
Oh, 5, 2, and 1. I'm sorry.
Correct.
For the aggregate, right.
For the-
Everything else will remain at 1 for the occurrence.
Okay.
Well,
Because I think that's all we're really looking to change.
see, I don't understand what the difference between the aggregate and the umbrella. Some have an umbrella that's larger, some have an aggregate that's larger. What is the difference?
When I spoke to our agent, yeah, I said, okay, explain to me each occurrence and the aggregate. So this was his example. So say you have a stand that goes down and 20 people get injured. Okay, and I'm going to refer to my notes. Each person could only go up to that 1 mil limit, and then it would max out at 5 mil. So out of those 20 people, you're going to be at 5 mil max. Not everyone's going to get that 1 mil. An aggregate, he said, is the total dollar payout. So if you have a 1 mil on each occurrence, that means whatever that occurrence is goes to a mil. Your aggregate then is everybody total, I believe, if I understood him correctly.
So it sounds like an umbrella.
Nancy,
Yes.
a question I have. Why don't you do this? You get those quotes, and then you have your insurance agent come with you.
I
Tell them,
dabbled with that.
So that we know what it is that they're, because I know, I mean, I deal with our company's insurance, and I'm telling you, and I'm sure Scott can also vouch for it, that insurance agents have a weird sense of humor as it goes.
They speak a different language,
Yeah, they
almost,
certainly do.
almost as bad as accountants.
To that question, John, we've been having trouble with this virus. They have been working from home and not allowing their people to come out.
Well,
So the only
now
thing
with
we could
everything,
do-
we would actually be able to bring them in through Zoom. So that
Okay.
is a possibility.
Okay, we'll explain that to them also in that respect,
So we could do virtual.
Yes.
if it had to be.
Yeah,
Do you-
I don't expect anybody in this room necessarily to understand insurance policy.
And it's, and one of the things that Pat said, previously, the insurance company and the agency were in Indiana. We didn't even really have a go-to person. We have an agency in Green Bay, and the guys are great. As John just said, I've done the same thing. Okay, dummy this down for me, please. So there's a lot of examples and so forth, so. All right.
Your March meeting is scheduled?
Think of it as the first Friday of the month is what it usually is. Unless the committee changes it. If they change it today, I will email you and let you know, or
Good.
text you and let you know.
Thank you for your time.
Thank you for your time.
Okay, and let's move on to extension of the county sales tax.
Thank you, Mr. Chair. I will start off. If there's things that need to be added, I'll have Mr. Kunish do that. Roughly about 5 years ago, the county board had approved the establishment of a 0.5% county sales tax. Within that resolution, it said that the county sales tax would sunset as if no action was taken as of December 31st, 2021. We've also received a letter from the Department of Revenue, which was in your packet, basically saying that if you are going to renew or extend the sales tax, action must be taken no later than September 2nd of this year. They need X amount of, it's roughly 120 days notice to be able to do that. As you had heard from from Finance Director Kunish, the county does collect roughly over the course of the last few years, $1.2 to $1.3 million in revenue. The purpose of this revenue when it was first passed was to help cover the utility aid that we were getting from the Kewaunee Power Station nuclear power plant. Once that was decommissioned, that utility aid was stepped down and eventually eliminated as a revenue source for the county. We have provided you a variety of information. One was the resolution regarding the sales tax. Another is the county ordinance regarding the sales tax. And then we have basically the collection of the county sales tax from basically 2017 through the end of this year. And then some basic information about the county sales tax, what other counties have a sales tax. Currently, 68 out of 72 counties have a county sales tax. And we also provided some information from the Wisconsin Taxpayers Alliance, now called the Wisconsin Policy Forum, regarding the county sales tax, its purpose, and the like. I could go longer, but then I would be getting my moniker of waxing poetic when I don't need to, so I'll wait for questions.
Go ahead, Doug.
Could you go back over why we initially imposed it? You said something about cover utility aid?
Certainly, yes. For a number of years, the county, in fact, we still do. We still collect what is called utility aid that is provided by the state, and that is for utilities, whether that's power lines, windmills, any type of power plants or the like. So we were receiving at the time back in 2017 about $750,000 in utility aid. And that was primarily due to the Kewaunee Power Station. So we were going to lose that aid because the power station was no longer operating.
So it was a reaction to that shutdown?
I don't want to speak specifically for the board, but I believe that was the main impetus as to why we did that, because we did not have a revenue source that would be able to cover that $750,000.
Question for you, Scott. In the event that we didn't have the sales tax, that 0.5% sales tax, what would that put as far as the stress goes on our county budget?
Currently, we for 2021, we budgeted $1.15 million within our budget. We budgeted 1.15 million of sales tax revenue as part of our budget. As a matter of course, we don't budget every single dollar amount that we estimate. And part of the reason why is if there was ever a downturn in the economy, we would more than likely see a reduction in sales tax, which would therefore cause deficits. The very first year we budgeted 750, then we budgeted $1 million for like the next 2 years, then went up to 1.1. So long and short of it, Supervisor Massler, is that if the sales tax were to go away, we would have to find a way to cover that $1.15 million, which would either have to be through fee increases, additional fees someplace else, and most likely some type of cuts in services in expenditures, because the amount of revenue sources that are available to a county are very limited. We already tax to the max, so we could not just ultimately just put more on the people's property taxes. If we were going to do that, beyond that, we would have to go to referendum for that additional money.
Jeff?
I think I've asked Paul this in the past, and I don't believe it's very easily trackable, but the online revenues, online purchases that people make, we have to realize that that's probably a pretty substantial amount of money that people are making from within the county, online to Amazon, any big box store, anything. That revenue, then the state, I believe, passed legislation that money is supposed to come back to both the state and the taxing jurisdiction of the counties. Do you have any idea on how much that may be?
I have access to sales tax payments, but what it tells me is who it was and a name, address, and a dollar amount. I don't have an industry code. I don't have anything that would say what originated it. So I can't say how much was due to the online, but you are right that if it's mailed to your house, the point of sale is determined to be your house, which is in Kewaunee County, which means we collect Kewaunee County sales tax as well as the state sales tax, as opposed to you driving to Brown County and picking up where point of sale is at the store, Brown County sales tax, state sales tax. As far as determining how much it is, that's unknown. There's also the other piece of this out there that anybody coming through here who doesn't live here, who buys something, is paying some sales tax that's coming to Kewaunee County. Lots of numbers are thrown out. There's really no support for that. 30%, I think, was tossed out there. There's really no way of determining that. And the state agency who does the studies and provides all this said the same thing. Yes, there's some amount of it. There's no way to determine how much. Same thing with the online sales. The information that they collect doesn't allow them to determine how much is online. However, 2020 being different, it could be a significant part. Typically, sales tax in a recession will decline quickly, which is why we don't budget the full amount. 2020, apparently people kept spending, they just spent differently, purchasing local, purchasing online. And it made a substantial difference, I believe. Just unfortunately can't go back to the data and say, here's how much.
And the thing with sales tax is it's a user fee. I mean, if you don't buy it, you're not paying it. So I think that the county would be missing out on dollars that are being spent, whether online or in county, by not having this.
Scott, was there any information on the rationale why counties have adopted this? You described what would happen if we don't have it.
Right.
So maybe it was a convenient way to get around the limits on how much you could increase revenue by going to a sales tax. But we had a specific rationale. And there's 4 counties that still don't have it.
Correct.
Do we have an understanding of, where other counties are, why they adopted it?
It comes down to basically 2 different things. One is, again, having a variety of revenue sources to fund operations. And while unspoken, yes, a county sales tax does allow counties to be able to have another revenue source when they've already hit up against the levy limits. So while it says very specifically in state statutes that sales tax must be used to reduce the property tax, must be used to use the property tax, there's a variety of different arguments that come into there. And probably the biggest one is that the sales tax is used for what would be considered capital items. And so therefore capital items can be placed on the property tax and not be part of the levy limit. So you see a number of folks that what they will say is that the sales tax is being used for capital items, for capital expenses, which is therefore, if we didn't do that, we would be taking out debt, which would therefore increase the property tax bill. So.
But the 4 that haven't adopted it, do we have any inkling why they haven't done that, or are they on the verge of doing it?
Some of it is, and I want to double check my map as to which ones. Racine, Waukesha, Winnebago, especially, I think it's a combination of 2 things, Supervisor Baker. One is political philosophy and 2 is financial need. I know that in Manitowoc, you have the current county executive that until he is no longer in office, he will never support a county sales tax. I believe that in Waukesha, which is a conservative county, they also will not support a county sales tax. Plus, I believe there's probably enough net new construction and the like that they are able to do what they need to do. As for Racine, that may be the case as well. And as for Winnebago, again, you have Racine, Waukesha, and Winnebago, which are urban counties, of which there may be enough net new construction that as a county, they may not need the county sales tax, and or you have a county board that just would not support a county sales tax.
Virginia.
Okay, I remember back when we were first going to implement this and we had that open meeting at the fairgrounds, and it was asked across the board, is a sales tax in Brown County and Door County keeping you from going to either of those counties and doing shopping right now? And it was almost unanimous that everybody said that yes, they shop in Brown County at the malls and they go to Door County and shop. So that wouldn't keep them from shopping in Kewaunee County. So, in the long discussion, we only had one person that came forward and said, I'll never eat at a restaurant again if you do this sales tax. And I remember that. And then we figured it out that he had a $50 bill and what the difference would be. And the gas just alone to go over the Brown County line was more than the sales tax. And then everybody started laughing, and that was the end of the discussion. And I think everybody there, even when they were somewhat hesitant to do it, walked away from that meeting saying, we need to do this.
When you look at it, $100 seal will cost you 50 cents. you won't notice it. A sales tax is probably the least painful tax we're gonna pay because it's a little bit here, a little bit there. When you get your property tax bill, you definitely notice it. And it's up to you guys where you want to go. Tom, Virginia, and I were part of the finance committee at that time, and I supported. I believe Tom and Virginia also did. The only recommendation I would make is that we don't put a sunset date on it this time. We can always put it open for review, but I wouldn't put a sunset date on it. Go ahead, Doug.
One other question.
And then Tom.
Oh, I'm sorry. Chairman Olson brought up the fact that it's a regressive tax, but from the data you can collect, can you get any demographic information on who's paying it? Okay.
Tom.
If Dominion or the nuclear plant was still operating, we wouldn't be discussing this. When they left to fill that $750,000 gap at the time, there was no other source that the county could think of to recoup that much money. And as for some of these other counties that may not have it, like Racine, part of that issue too is I'm sure their equalized value with their property values are much, much higher than we have here. So there's a number of factors that go into play as to generating various types of revenue. But I don't see any other alternative in our county other than reducing services, reducing employees to make up that $1 million. So I would support, reinstituting it or removing the sunset clause or whatever we have to do.
What is the next step? This still has to go, this is a county board decision, right?
Correct. It is a county board decision, but the finance committee can make, and I would suggest that the finance committee make a suggestion or a recommendation to the county board.
When we met last time, it was, let's not just jump into this, let's talk about it. And I don't know what other information we could get that would, since we don't have any demographic or any way to break down who's paying it, it's really hard to see if it's punitive to any group.
Doc, it would be paid by basically individuals, businesses.
Yep.
I can tell you that last year, just with the equipment that we purchase every year, and each year we purchase hundreds of thousands of dollars worth of equipment. Every bit of it is taxable, with the exception, there are a couple of exceptions that we don't have to. One would be if it was a road tractor or if it was a semi-trailer, then we don't pay it. But everything else, any of our other trucks, we pay it on,
I guess I'm still not sure why Chairman Olson brought up that it was regressive, because the essentials, they're not taxed, right?
Well,
Food is not taxed, right?
Well,
The ultimate, go ahead,
it's
Paul.
regressive in the fact that if you have less income versus more income, you're spending more as a percentage of your income on sales tax.
Yes.
But you're paying more sales tax up here. So that's one of those arguments is how do you want to slice it? How do you want to argue it? Yeah, it's true. But, people who earn more are buying more and paying more. But as a percentage, it's been determined that as a percentage that lower income people are paying more.
But does that really differ from property tax? I guess you
Well,
pointed
that-
out that's
yeah.
regressive, but is it, if you own a home,
If you own a
have
small
low
home,
income, the
it's
same problem
possible.
exists.
It's out there. You can make an argument for or against based on all of this stuff. And if that's a point of view that this is regressive, it's not fair, then
Well, that's what,
okay. But if you're buying less, and again, essentials like groceries aren't taxed anyway.
you're right.
So that's already built into it.
I'm just trying to make sure that there is no obvious difference between that and shifting it back to the property tax, even though we wouldn't be able to make up for that loss.
No, we can't do that. No.
I can even say it this way. Usually what happens is that if you have a tax that is flat, that is done to everyone, it is considered regressive. Why? Because I'm paying the same amount of tax on. I'm spending $500 on school supplies and I only make $15,000 a year. You're spending $500 on school supplies, you make $150,000 a year. As a percentage of income, it's more regressive. But the property tax is similar in that respect, in that it's a flat type of thing. An income tax is considered a progressive tax because as you earn more income, you pay a higher percentage. Now, as you said, and I agree with you, Supervisor Baker, is that in this respect, the sales tax, while in it under the definition of being regressive, is regressive. But when we're talking about most of your essentials being tax-free, then the effect on lower income folks is going to be diminished as opposed to if it was something else. So just from the straight definition, yes, it's regressive, but I believe, and I would think that most people would believe, that the sales tax does not have a crushing effect on lower income folks within the county, in that most of the essentials are tax-free. So,
And if we're buying our stuff in Brown County, which is where a large portion are, we're paying sales tax anyway, we're just paying it to somebody else.
But two things, when Chairman Olson brought that up, I thought it was to differentiate it between the alternative, which is to not pay it, and then, well, we're already taxed the max anyway on property tax.
correct.
So I don't know how that differentiates it anyway from where the money would go otherwise.
The only way it would differentiate, honestly, is if my own personal opinion is sales tax would be better. Why? Because in a property tax, you own property, you're paying the tax, and so therefore you're either a resident or otherwise. If you're a visitor, you're not going to come in and buy a piece of property, hold it for a month, and then sell it and leave. This is where you're going to get a certain percentage, not a large percentage, but a certain percentage of people that are coming into our county, making purchases, and therefore having to pay the county sales tax, which is revenue that is coming from folks that are not our residents. It's not a large percentage, but it is a percentage.
I just want to make sure I understand. When you said we can't go back, what did you mean by that?
If the sales tax doesn't continue, we can't add it to the levy. That is not an option. We're at our limit.
So that, for that very reason, right?
Yes.
So we would have to reduce our
Find other revenue, cut our
Or
expenses,
go
revenue would go down
or
by-
go to referendum.
or go to referendum, you know.
got it, okay.
And we're not cutting it by reducing office supplies. We're talking six figures, 700 some thousand plus 1 million. It's going to take large cuts.
So-
Interestingly enough, though, back when the sales tax was enacted, we had no choice because the loss of utility revenue was just gone and there were no options. Shortly after, sometime in there was this 5-year step down payments where we went from the full amount down to our current 250,000-ish. Now the law has changed, whereas there's counties that have, or municipalities that have coal plants or whatever shutting down. Now that can be added on. So we didn't have the option then, but the question still remains, do you want to add it to your property tax, your owners, or would you go with the sales tax? At the time, that would have been a good question, which then I would understand, and Chairman Olson's point of, well, this is regressive, maybe we should consider adding it to the property tax. At the time we added it, now it's here. It's awfully hard to get rid of it once it's here. And I think that was his point too, is if he was here when we were enacting it, I don't think he would have supported it for that reason. Now it's a part of our budget. We kind of have it built into our budget.
So if my decimal point is correct, if a person was to spend $10,000 in the county, your tax collection would be $50?
Yes.
That's the financial impact on a low-income person if they're spending $10,000 on non-essential items. That's not their utility bill. That's not their mortgage.
Not grocery, right?
It would not
Not
be, it would
groceries.
not be groceries and all of those that are tax-free. Actually, sales tax is included in your utility bills.
Okay.
But either way, it's minimal. Yes, you are correct.
$10,000 in spending like that is gonna be $50 impact,
Correct.
just to keep it in perspective. So when we're looking at $1.3 million in sales tax collections in the county, a lot of that is spending that is gonna be done, whether it's in Brown County or online, that we're at least capturing. And that's not a lot of impact on the individual. And it's also all the visitors that are coming in. That's collected on hotels, restaurants, gas stations, all that, with all the people that are coming in outside the county. So, and Tom gave a great example of why this was initially considered, is we lost $750,000 annually from Dominion. And we're either going to have to cut services or find another means to revenue source. And I support this, and I would make the motion to go forward and continue with the sales tax. I would, however, support include in my motion a sunset of 5 years. I think it should be reviewed. And so that would be my motion, to continue with the sales tax going forward with a 5-year sunset.
Okay, we've got a motion. Do we have a second to that motion?
I'll second.
Second by Tom. Any discussion? Go ahead, Duke.
So I was going to ask this before Jeff did his motion, but this is about a 10% hit in our revenue?
Correct.
Okay. And there's no way to make it up unless we were to
No.
raise fees by 10, to
Right.
generate that kind of thing.
Raise fees, go to referendum to exceed their limit,
Referendum or raise fees.
or slash expenses,
Or some combination of
or
the
some
three.
combination, yes.
Any more questions? Okay, I'm gonna ask Scott, you take a roll call vote on this one, okay?
Certainly. Supervisor Baker,
Aye.
Supervisor Vollenweider,
Aye.
Supervisor Haskey,
Aye.
Supervisor Robin,
Yes.
Supervisor Massler.
Yes.
Motion carries.
All right. Next,
Yes, Mr. Chair. Regarding the 2021 IT budget outlay, we have a couple different things here in front of us. The reason they are coming in front of you is that with the routes to recovery money, the 2021 budget outlay, or the projects that were going to be done by the IT department, were already paid for. We got the money and we're able to do those projects in 2020 and into 2021. So what we would like to do is transfer some of this money from a contingency standpoint and take what were projects for 2022 and move them up to 2021. And so what that would mean is that there is a request of $21,000 to be brought forward for some of that, as well as there is some maintenance agreements that were missed from our CIP standpoint that need to be added as well. Ross, hold on, let me see if I can do this. Can I unmute? There we go. Ross, did you want to add anything on to this at all?
Just that with the maintenance agreements. So the one big one was the Citrix licenses that we purchased for the pandemic back in 2020. That we, in order to get our employees home and working during that period of time, that we purchased the Citrix server and licensing to make that available. So in 2021, this is the maintenance renewal for that. And then the other, go ahead if you have a question.
Yeah, I mean, why didn't that make it into the budget as a line item if we purchased it in 2020?
We didn't actually know what that number was going to be until they invoiced it for 2021.
But we knew we were gonna have to pay something, right?
Correct.
Is that just an oversight? We forgot about it or what?
Yeah, I believe I'll chalk it up as an oversight on my part that I did not realize that there was a substantial renewal for that. I knew that during the pandemic, it was scrambled to do what we needed to do. And then it was just an oversight on my part as far as the budget for 2021.
And for me, that raises a question about, are there other things that we're gonna see come due for maintenance agreements or licensing agreements for equipment we bought with the CARES Act money in the fall? Such as this equipment we got right here, that we may have to, again, do the same thing. Ask for more money for paying for the equipment that we thought was basically gonna be paid for by the federal government.
I have kept track of all of the stuff that we purchased for like the rooms that you're sitting in right now and the equipment there and the renewals, and they will be part of the 2022 budget.
But are we going to be paying, do we know what we're gonna be paying for all that new equipment? In terms of additional, I mean, we thought it was a one-time shot, that we were gonna get this money from the CARES Act and we would be done. But it turns out that we got the money and now we're gonna be paying even more for maintenance agreements and licensing?
Well, the Citrix, yes, that for the remote access, yes. I don't believe we're actually going to pay anything on a yearly basis for the equipment we purchased for the AV stuff that's in the room now. Most of the other stuff that we did purchase was PCs, laptops, those type of things, which don't have any maintenance agreements. Anything licensing, which basically included the major one was the Citrix one. That one was new and was missed. But I don't believe we have any of the AV stuff that we purchased has any maintenance agreements attached to them. But I will verify that, but I don't believe that there are any. Those should be a one-time shot.
The maintenance agreements were basically for, I'll call it for remote work, in the respect that when we had all of our staff basically working from home and on laptops and working from home, that required an increase in the number of licenses, the Citrix licenses. And yes, there was an oversight as to what that annual cost would be for those licenses, for those maintenance agreements. But as for the AV equipment that is in the different conference rooms, there is not a maintenance agreement for those costs. We're buying the equipment, but I believe if there is any type of maintenance agreement, we'll have Mr. Loining check that out. But if there is anything, it should be minimal.
So with the people getting back to work, are we still doing that much remote work, and do we need to maintain these licenses?
That is something we continue to review and take a look at, because eventually what we may want to have is a conversation as to how many staff do we want to have working remotely? How many do we not want to have working remotely? What are the advantages and disadvantages of having people work remotely? If we have more people working remotely, do we need to have more office space, or can we reduce that footprint as well? So we're kind of in flux right now on that issue, but you bring up a very good point, Supervisor Baker, that this is something that we need to pay attention, because we don't want to be spending money each year for 150 Citrix licenses and only 20 people are using them.
Yeah, I just think from a economic standpoint, we're not keeping our eye on the ball here with this one, where we're paying for a luxury of being able to work from home. We needed it last year, but I think people are generally back in the office, and we're paying for all those offices as well to maintain this ability to have, a great number of our employees go home without any savings in our office space. Seems like we don't need to maintain that double capability, if you will.
Right.
If I may add also, one of my CIP projects is to virtualize desktops, which means that when a user logs in, that there is no software located on their personal computer at their desk. It's all virtual on a server. And part of that project is actually doing that through Citrix, so these licenses will be used no matter if we don't have remote users or remote users by starting to virtualize their desktops.
And Ross, explain explain why virtualization of desktops has a cost savings.
Well, right now we have 120 users with laptops, devices, probably over 300 devices, that if there is a Microsoft Word update, we have to go around to all the machines and physically update that software, along with any of the other softwares that is located on the machines. And any given machine probably has 20 different software packages on it. By virtualizing, I can do that once on the server and everybody receives it. So the maintenance of the software packages is greatly increased by going virtual and having less time, more efficient.
But that doesn't save us any real money, right? I mean, I'm not diminishing Russ's time, but it's not eliminating a position or anything like that.
No, it's not. But I mean, as IT moves forward, again, for 18 years, there was only one individual, which was me doing it. Now we have two, but most counties have more than that in order to keep up with that. This is a way for us to be more efficient, to be able to handle the user's needs at a quicker and more efficient way. It doesn't necessarily save us money, but it does save us in time, going forward with things.
Ross, if we virtualize the machines, do we also reduce the cost of having to have specific software licenses? Where with each machine you have to have a Microsoft Office license for each of those machines. Yet, if you did it this way, would that reduce some of those costs?
That would not. If you needed 200 Microsoft licenses, you need 200 Microsoft licenses. Okay. There is no cost savings by going virtual as far as licensing. It's just more time and effort that really we're saving.
Gotcha.
Russ, was this on your capital outlay plan for out years to get this license?
Well, it was part of the. I did have it on my CIP for. I don't have that in front of me as far as what year it was, but it was virtualizing desktops was one of my goals to go with. One of the models that our county uses is they're all virtual as well, and it just saves them just a tremendous amount of time than visiting 250 machines. But
yep, that makes sense. But was it the Citrix license? Is this what you would have bought to go do that?
Yes.
So it was on your capital outlay plan for an out year, for some year in the future?
Yep.
Okay.
I have another question then. I agree with Doak. I think our needs assessment needs to be clear on what the needs are. I understand the maintenance and what Ross has to do and the ease of it, and that makes sense. With virtual being something that's become new and kind of normal in many situations, is the CARES money still out there that would take care of this year for a need, being that we're still doing virtual? Can any of this be offset by CARES money?
All the CARES money, at least that was received for us from the routes to recovery, had ended November 1st of last year. If through federal that they want to have another round, well, then that could be a possibility depending on what the criteria or requirements are for any type of new funding. But as for right now, all CARES money has been spent, at least from the county standpoint.
Okay.
Just as a point of clarification, earlier in the meeting, you had mentioned that if we were looking at overtime pay for the health department, you thought we could get CARES money for that.
Correct. So then I'm going to apologize that I misspoke. Routes to recovery money has all been done, and there's no future routes to recovery money. There is CARES money that is still around for both public health department and for emergency management. But we would need to make sure that if we're going to do anything, that it somehow meets within those criteria. I'm not sure if this would allow for that or not.
Okay, so there's a narrower definition of how we could spend that, and you don't believe that this license fee would be covered?
I don't believe it would, but again, we can try to double check on that. I think most of what we're talking about now as to, and I'm not even sure if we call it CARES money, it may just be state of Wisconsin money, is focused more on public health and vaccinations and those types of things, as opposed to, what do I want to call it? Remote work and hands-free type of things. So I apologize for the confusion, Supervisor Baker.
Makes sense now. Yep.
So this will be an annual budgeted amount that we're looking at.
Ross?
Yes, that is correct.
And again, do you foresee there being any different options going forward that this could be cut back on cost or something? Kind of, I guess Doak gave a long explanation of it. I'm just kind of going with him on that. Is there anything we can do to whittle this down?
Well, I mean, we certainly can look at that. The unfortunate thing is the more we move to what I'll call cloud-based software, which is pretty much what companies are doing now. Microsoft, pretty soon, I would imagine Microsoft is not going to even sell the product anymore. I don't believe Adobe sells product anymore. It's primarily by subscription, and going forward as far as that goes. I think we can certainly look at the Citrix option, and if we're not ready to virtualize desktops yet, we could probably look at reducing that for 2022 down to a number that's a little bit easier to swallow at the time. I mean, at this point, there's not much we can do. We purchased the license in 2020. The renewal is due. We're still somewhat into the pandemic, and there's still plenty of people working remotely. And this also covers, just for human services, in fact, all of the remote users that we contract with, they all come through this product called Citrix to connect to the TCM software for human services for their clients. So we have probably at least, last count, over 12 or 15 companies that have multiple users that connect, that do work for us, that we hire as outside contractors to see clients for Kewaunee County. So they use this product as well.
So yeah, I think what my understanding is becoming a little clearer on this. It's not so much that this is just to allow our employees to work from home. There's so many other aspects of this that's being utilized remotely, I guess, that it isn't just for people to work from home.
Correct. I mean, the sheriff's department utilizes Citrix for their officers, their command staff that get calls in the middle of the night. They log in through Citrix to connect to Spillman, to check on things, to do different things like that. So it's used by multiple departments, even outside of the pandemic.
Yep, thank you for that.
Can we talk about the second part of your request, the servers?
Are you talking about the switch upgrade?
Is it switches?
The core switch upgrade?
Okay. You had asked to move that up from 2022 to 2021?
Correct. In 2022, I had a project to upgrade the core switches in our server room. And that upgrade would allow the servers to communicate with each other over 10 gig rather than 1 gig, which increases performance for our users outside as well as inside our company. So in 2021, I had scheduled some other projects to be done But those projects, fortunately for Kewaunee, were paid for by public health and roads to recovery money. So we had that money in the budget for 2021. My original request was to move the core switch upgrade from 2022 to 2021 and do that this year instead of next year. And then in doing that, we would transfer the door lock software that I'm basically in charge of, but the money resides in the maintenance department's outlay for that software package, just to be transferred to my outlay, and then I'd be able to complete that project.
So my question about that spending is, what is the technical reason for moving it up a year?
It's just that, right now, we do see some periodic slowdowns on our network. And this was the project that would correct that. And by moving it up a year, it eases some of that need by our users to increase their speed to their software and do those type of things. Does that answer your question?
Right, but we lose a year on we've lost a year of value for the switches we already have.
The switches that we already have been in place for over 5 years. So those switches needed to be replaced. We continue to use equipment further and longer than it's necessarily intended to be used, just because of funding and different things like that. So we've had more than enough use of the current core switches that we have.
Question. I guess I'm still trying to figure this out, but the issue with the license fees, is that 21,000? Is that what the cost of that is?
13 of them.
Or is the
16.
And that's two
I'm sorry, I
different
wasn't, my mic wasn't on. 16,614.
for two license fees.
Correct. One was for the AS400, which is the financial software, which the server was purchased 3 years ago. And we had a 3-year maintenance window on that server. And then this year is when it came due. And that was, again, that was, my fault. I missed that. But at the time, the AS400 used to be in finance or the clerk's office for their support. And it's been moved to my department to basically manage now. And with that move, there were some things that were not necessarily tracked. So that the AS400 is again a yearly maintenance agreement for the financial server.
Did that carry your question?
well, so is it 16,600 and another 4,400? Is that what we're looking at?
No, it's 16.6 is a total. That makes 13,974 for Citrix. And 2639 is for the IBM server.
And he's asking for 4,600 for new switches.
That's moving from,
That's all part of the same request.
yes, it's all part of the same request.
But is the 4,400 for the switches, is that already in the 21 budget? It's just that you're going to use it for a different project than was originally planned? Is that?
Yes, it was in the maintenance budget for this.
The door lock software.
And since that was already done, he's asking for it to be used for the server upgrade.
So it's just a matter of transferring it from one project to another. The money is there, but the license, the Citrix license and that other money, that is going to come out of the contingency fund?
Correct.
Okay, now I get it.
Okay. Any more questions? And hearing none, I need a motion to transfer this. Motion.
So are
I'll make that motion.
do we need two motions or one?
Just one, because it's one, it's only one on one transfer form.
Okay.
Virginia.
I'll make that motion to make the transfer.
Okay, motion by Virginia, seconded by
I'll second.
Tom. Any additional comments? Good. All those in favor signify by saying aye.
Aye.
Opposed? Motion carried.
Thank you.
Thanks for your time, Ross.
Thank you. I don't mean to interrupt. Scott, can you unmute the Ross Learning host? You muted your host and not, there you go.
Sorry.
Okay, we need a motion to approve the supplemental payroll. Everybody except for Jeff got a chance to look at it. Motion by
Second.
Doak, seconded by Tom. All those in favor signify by saying aye.
All right.
Opposed, motion carried. Number 13, that one, we're gonna just,
Yeah.
number 12. we'll
Yeah,
just
number
eliminate
12.
that.
Unfortunately, Mr. Wisnicki and I and Mr. Massler were not able to get together. There was some, Mr. Wisnicki was a bad boy. We had to quarantine him for a little bit. So we were, actually his kids were bad boys, but so we haven't been able to get there. So we hope to then at the March meeting, bring the copy of the new bail house lease with the guidance that the committee had provided for consideration and possible action in March. May I move on to number 13, if I may, Mr. Chair?
Certainly.
So just one item I wanted people to be aware is that from a standpoint, I've had a conversation with the finance director and myself and me as acting director of human services, and we will be transferring the accounts payable function from the department, the human services department, and bringing that up to finance. Actually, the human services department was the only department that was doing their own.
No, highway
yeah, that's
also.
highways also. They're special. They don't count. All the other departments except for highway do all the accounts payable function is done through the finance department. We would like to bring that up there. We believe that therefore there will be operational efficiencies as well as that will help to provide some more staff time and resources for the billing and the credentialing standpoint from an administrative standpoint. So I believe this will be a positive for not only the county, but also the Human Services Department. And I just wanted the county to be, the committee to be aware.
Next meeting, that would be March 5th, 8 o'clock. Work for everybody? Tell me yes, because it works for me.
Yeah.
March 5th.
It's not gonna snow that day, so you can't go snowmobiling. Yeah. All right, March 5th, and if there's no other business, we need a motion to
Move to
adjourn.
adjourn.
Moved by Tom, seconded by Virginia. Your hand was getting too tired. It's a little slow there. Virginia beat you to it. Okay, all those in favor signify by saying aye.
Aye.
Aye, okay.
Opposed?
No, I'm not